The Dow Jones had the worst day since March, I just read. The S&P and NASDAQ both down 1.5%. Of course, guys, there's always going to be things they blame. The day started out low. Pre-market early this morning was down about 0.6, 0.7. And then things got worse. 10-year Treasury went over 4.5%. Now, you might be wondering, why does that affect stock investors? Well, remember, 2 years ago, when we had 0% interest on a 90-day Treasury, 1.8% interest in the 10-year, people had said, why should I put money in a bank account? I should put it in the stock market. At least I'm getting a dividend yield and getting capital growth. Okay, well, fast forward 2 years. Now the 10-year Treasury pays 4.5%. Now the 90-day Treasury, the 10-year Treasury pays 4.5%. The 90-day Treasury pays 5.5%. That means if you give the money to the government for 90 days, they're going to give you 5.5%. And it's virtually risk-free. So why in God's name would you invest in volatile stocks if you need cash short-term? Even just keep rolling a 90-day Treasury. That's what I've been doing. I'm getting 5.5% sitting on my cash. And that's what I mean when I say, guys, that it's perplexing to me because in March of 2022, when interest rates were zero, the S&P was about 4,500. Now interest rates are 5.25 to 5.5%, and the S&P is only at 4,273. Guys, if interest rates act as a drag on stocks when they go up, how are stocks only down 7 or 8%? Unless there's a lot of pent-up things happening. And that's what I think. I look at my stock market to GDP ratio. It's still 75 to 80% overvalued. And for those you haters out there who try to justify that value, the 10-year PE ratio is even worse. It's 78 or more, 78 to 80% overvalued based on history. It sets at 30 when the historical average is 17. So count GDP any way you want. I don't care. Paul, American companies get so much business overseas, blah, 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 blah. Fine. But the 10-year PE ratio, which just measures earnings no matter where it's earned, is even worse. Guys, I only say this to say there's going to be next 10 years of not much in terms of return. I know that sounds hard to believe considering the last 10 years and the last 12 years and the last 15 years. But the reality is there's a very, very high correlation. The more you pay for something, the less return you get. That's the reality of it. And we're coming off an economic boom that was huge. It basically lasted for 14 years. At some point, you got to take a breather here. We have 3.8% unemployment. This is not to say sell your stocks. Not at all. We don't know what's going to happen in the markets. Things can stay irrational longer than you can stay solvent. I do believe the adage of it's about time in the market, not timing the market. Okay? Stay in the markets, buy low-cost ETFs. As stocks go up, here is what happens to actual values. I've done this chart 1,000 times in our videos. Values go up like this. Stocks go up like this. Your job is to buy all along the way, up or down, and your average repaying is this. Now, if you have balls and you realize that stocks are below value at some point, put more in here. Because guys, guess what? In order for this to happen, the story has to be bad. The world is falling apart. There's going to be some incident that occurs that says, Paul, but you don't get it. Guess what? The Great Depression happened. 2 world wars happened. Atomic bombs happened. North Korean War, Vietnam War, assassinations, oil crises, great financial collapse. And guess what happens to stocks? They do this in the long run. And if you go pick in history when you wish you'd bought, it was here, 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 when things looked the worst. So my request to you is, if you want to have somebody who's going to be here holding you and hugging you when things are bad, saying it will get better, subscribe to the channel because it always gets better. It's the USA, and this economy will continue to grow. Are we going to beat the growth of China and India and soon to be Africa? No. Why? Because we're so freaking huge and good. The average person in this country makes almost the per capita income in this country is $80,000 a year. In China, it's 12. In India, it's like 3 or 4. They have a lot more growth potential than we do. Stop worrying about, oh, they're going to overtake us. China owns our debt. Stop. And anybody in your environment who says that, get rid of them. Unfriend them on Facebook. Unfollow them on Instagram. They are losers. Now, what I want you to do is understand that cycles happen. And just like you shouldn't feel very euphoric when things go up, don't get down on yourself when things go down. It will happen. But if your outlook is more than 10 or 15 years, your job is to dollar cost average from here until you retire. And if you choose to buy individual stocks at some point, learn a process, understand what free cash flow is, understand what the balance sheet is. We're here for that as well. If you're new to the channel, this is what we do. We teach these fundamentals in our community, and people in our community talk about investing. It's a wonderful, wonderful place to be. But I can't stress this enough. Every story out there when things are good are going to be awesome. When things are bad, they're going to be negative. Just relax about that. News follows the stock prices, not the other way around. Literally, the best times in history to buy were the worst times that it felt in those moments. The world felt like it was going to fall apart in COVID. The world felt like it was going to fall apart in the great financial crisis. The world felt like it was going to fall apart during the dot-com boom and bust. Please go on and on the list. And the point is, if you had the gumption to sit there and buy during those times, or at least stick with your plan, you made a ton of money. But if you ran away, and this has been proven by so many people, so many organizations like Fidelity, people tend to really lag the market because they sell at the wrong time and they buy at the wrong time. They buy here, they sell here. That is not good. So be different. In order to beat the market, in order to at least forget about beating the market. In order to match the market, you must think differently than your neighbors. It's an absolute obvious thing to me because I've been immersed in it for so long, and I get so excited when stocks are down. I won't tell you what stock it was, but today one of my stocks hit another one of my price targets on the software. I got a notification, I went and bought more. It is down 50% from its high. I have other stocks that are down 80% from their high. I didn't buy them at their high. And in fact, people criticize me. How come you don't see this? This stock is obvious. It's overvalued. It falls 70%. I'm buying. Paul, what you don't get is this. So wait a second. Let me understand this perfectly. When it was 5 times higher, it was a great buy. When it's 80% lower, it's a bad buy. Well, yeah, because the story's changed. No, the story hasn't changed. The story that's coming to the surface has changed. And the other thing I'd argue is if you're buying only with a perfect story at the top, all the more reason why you have to change your process. You have to account for bad things happening. People say, Paul, you're too conservative. Fine. But you know what? I'm too conservative, but when I buy a stock, I go, please go down further. I get excited about it. I absolutely get excited about it. I own 12 companies right now. 2 years ago, I owned basically 0. Now I have 12 companies that I'm building more and more position in, and I have a list on my phone of 31 companies that I want to own for the long run. I own 12 of them right now, and I hope I own all 31. And when I buy them, I hope and pray they go down even further. That's the mentality you should have. If you're jealous of that mentality, you can have that mentality. You just got to surround yourself by the right people. We are the right people. Subscribe to the channel, guys. Enjoy the stock market and pray for a big crash. You will love it.